have to fix the recording of our webinar. Let's just wait for. Let's start at 7 a.m. At exactly 7 a.m.
No problem.
So, how many weeks are you using the indicator by now?
I've used it for a full 2 weeks.
For 2 weeks.
Yeah.
Okay, that's good. And you're positive since then because since last week it was a really good. Last week is a really good week for us, and still this week too. But one of the
Yeah.
best weeks was last week.
Yeah.
This is just the average gain that we can have around 400 to 600 pips. This time around, I think it's around more than 400 pips.
Yeah.
Right? Yeah.
Long may it continue.
Yeah, it is. I when I conducted this webinar, it's like for 13 weeks now or 14 weeks. I guess we only have a little bit of loss for 1 week, and the
Hmm.
rest are all positive.
Yeah. Yeah. No, it's really good. I mean, obviously, I think with any trading strategy, there's always going to be periods of stagnation.
Yeah, yeah. And so other users would be able to know how to use it too.
Hmm.
Anyway, thank you for sharing your trades too for this week. A lot of users
That's
are
fine.
really really like your result. But I hope everyone have the same result as yours because I guess you're just using the strategy that we are using, yeah, right?
Yeah. Absolutely. I'm not doing anything sort of magical. I'm just following the signals.
Yeah, yeah.
I've sort of added a little bits that I feel comfortable with, but nothing like I'm pretty much just following the signals, and that's
I'm
pretty much
really
it.
grateful that you're just using the strategy that we are using, and you are like 1,500 now for 2 weeks.
Yeah.
That's really great.
Thank you. Yeah, I'm hoping that one of the guys there'll have a punch at doing one of these webinars one week.
Yeah, yeah. I hope so too. So everyone would I would know that everyone is making money out of it.
Yeah.
Yeah, we can start now, Shane. I let you have the floor.
Okay, cool. Thank you very much for the handover. What I'm just going to talk to you guys about today is the trades that I took last week. So the different currency pairs and the trades, and I have done some analysis on the data I've collected over the last couple of weeks. So I'll sort of talk about that towards the end as well. Before I begin, I just wanted to say that I'm the trades I've taken. They are pretty much they are following the rules of the strategy that Amir has sort of taught. I've added in my own bits. I'm not sort of saying like it's the right way or the wrong way. I'm just sort of sharing what I'm doing at the moment, and I hope everyone can take some value out of that today. To start off with, just talking about last week, in total, I personally had 11 wins. I had 6 break-even trades and 3 losses in total, and I made 473 pips profit. I'll get stuck into the charts. I'll start from the top. AUD CAD. I did actually take a sell. I think some of the other guys took a sell on this on Friday. Just following the signals. On the D1, you had the sell there. Obviously, from this is going back to 26th of Feb. There was a sell on the H4. But on the H1, there was this sell signal here.
Yes,
So everything
yes.
aligned up. In terms of the fibs, this is what my fibs look like. So I've taken away a few of the levels that you use, Amir, which I will explain actually the logic behind these. So obviously this is the 50% mark. This is actually the 78.6, which I'm finding is very, very powerful. And I'll explain a little bit more about why I'm using that. Obviously take profit. And I set my stop loss always at the 0 line. So I know that you like letting your trades go into the negative. But for me personally, I feel more comfortable with having a hard stop on the zero level. So this was the first trade, one of the trades that I took last week. I entered around here, and I closed this position on Friday. It dropped nicely on what I called CAD Friday last week. Moving on, I also had a buy on the Australian dollar Swiss franc. So let me just quickly have a look at the chart. So buy there. Just trying to work out where. Okay, so I entered this trade on the 8th of March. So it would have been this signal here. No, apologies. This one here. Okay, so yeah, so obviously because the candle closed above the 50%, set the pending here, of which it triggered. Hang on 2 secs, sorry. 1, 2. I'm trying to work out. Excuse me. I'm trying to work out this. This was definitely a buy, but 8th of March. Hang on 1 minute. I think that was a buy.
Yes, it was a buy. The general trend for D1 is buy and H4 is buy. So yeah, Monday is a valid entry.
Yeah, okay. I know why this was a profitable trade, because it carried on throughout the week. It never hit take profit at the top, and I just closed it out on Friday.
Yeah, that's a good one.
Yeah, okay. So moving on, Australian dollar yen. This was a buy as well on the 8th of March. So it would have been this signal here. So 1, 2. Okay, yeah. So candle closed above the 50, pending sat here. It did go into negative equity for a little while, but then popped back up and then hit take profit. So that was the second trade I took.
It's a good one too. So that was 2 weeks ago, right? Just to be clear to anyone, it was 2 weeks ago. Your trade on AUDJPY.
8th of March. That was last week.
That was last week, yeah.
That was last week. Oh yeah, okay.
So these are all trades that I took last week.
Okay.
On AUD New Zealand dollar, this was a buy, which ended up in break even. So that was on the 8th of March. So there's the buy signal there. Yeah, so it's all aligned. So in terms of how I'm doing break even, 1, 2, so that would be the high, that would be the low. So what I'm using for break even at the moment is a 78.6 fib. So what would have happened here is I would have set the pending position on the 50. It's come in, it's entered the trade. Now, as soon as the price has come back up and hit the 78.6, at that point, I then bring my stop loss to break even.
Okay. That's why you're break even there.
Yeah,
it's a good one to protect your trades.
Yeah, but I am.
Could you repeat that again?
Yeah, sure. So I've set my pending here. As soon as this candle closed, let me just get rid of this blue line, and let me zoom in a little bit. Okay, so as soon as this candle closed, I set my pending along this line for a buy. The price came back down, entered the position here, then moved back up, and as soon as it hit the 78.6 fib, at that point I broke even.
He will move my stop loss from down here. To be clear, he will make a take profit or a stop loss, or no, a stop loss at the end.
Stop loss
at the entry price. So if ever the market went down again, he will close the trade. So it's a break even.
Exactly.
Yeah. You will just have a stop loss again on the entry point.
So the stop loss, which would have been down here, I've always moved my stop losses 2 pips above my entry.
That's a good strategy too. So you can at least be safe.
Yeah, so I'm testing that at the moment. I think looking back on the last couple of weeks, there's not enough data to determine whether it's actually worth using a break even as a long-term strategy, but it's just something that I'm testing at the moment and collecting data on.
But I suggest, I don't know, just on my mind, I suggest if you will just instead put it at 0 pips close profit, at least make at least 3 to 5 pips profit, so you would at least pay for the commission and the swap if there is ever.
Exactly.
Yeah. At least make
that's the
3
reason
to
why.
5 pips above the entry point stop loss.
Okay, so as soon as you get to the 78% fib,
Mhm.
you move your stop loss.
Yeah, I personally moved my stop loss from the 0 2 pips above entry, so that if the market reverses on you, because what I'm seeing quite a lot of the time is that the price will hit the 78.6 and then it could potentially reverse and go out the back door.
Yeah.
And doing some analysis, which I will cover at the end of this call, I've actually identified something quite powerful here with using this 78.6 fib, which would have eliminated some of my break-even trades and one of my losses this week, and potentially keep us out of dangerous trades, especially where we're taking all of the most of the signals.
Yeah, it has the same concept by to me, where if, for example, you hit a 50 pips profit, at least save 20 pips already there or 10 pips from that. But to him, he's just following the 78.6 Fibonacci, at least to save his profit and not to have negative trades. That's a good strategy too. It has the same concept.
Cool. Okay, so I'll move on. Amir, do you want me to cover any, like, all of the currencies or just the
No,
trade
it's
side?
fine because AUD USD there is no trade, or
Yeah.
only the trades that you take. It's fine.
Okay, fine. So CAD Swiss franc, we had a buy on the 10th of March. This was actually really nice.
Yeah.
So it was this one here. So going back 1, 2, that swing high to swing low. So again, I entered this straight away because it was below the 50, just about. And then the price went sideways. As soon as it hit the 78.6, I would have broken even. So I would have moved my stop loss 2 pips above entry, and then it carried on up and hit take profit.
Yeah, that's good. That's good. It's how many pips was that? I guess around 45 pips.
Yeah, I can measure it out. From there up to there. Yeah, 40 pips.
Okay, 40 pips.
So the next one was Swiss franc yen. I had a sell and this broke. I broke even on this. I remember this one actually. I think Adrian took this with me. I didn't actually have a direct signal on this one, I don't think. Let me have a look.
I guess there are 2 trades there, as I remember. Yeah, but it's somehow break even.
Yeah, and I'll show you. I'll demonstrate exactly how the 78.6 was very powerful here. So this was actually the sell signal. Let me just have a quick look at the D1, H4. So this was a sell signal here. So if we go back 1, 2, swing low, swing high. Okay, so you can actually see price clearly rejecting the 78.6 down here. It's rejected it 3 times. So I set my pen, as soon as this sell signal came, I set my pending here. The price then came up and hit it. And then it literally to the pip, hit the 78.6 there. And as soon as it hit there, I broke even, then it went straight out the back door.
Okay, that's a good strategy because if not, you are actually negative there.
Exactly. You can actually see if I zoom in.
That's a good one because to me, I'm negative on that trade. But there is there's another trade for last Friday, right? Last Tuesday, I guess. There are 2 trades on CHF JPY.
The second sell signal. Or
okay. Do you have a buy trade on CHF JPY? Because there was a buy too last Thursday.
On the Swiss franc
Friday,
yen.
I mean, is it Friday? A Friday, yeah, it's an open trade.
So this is the D1 buy.
Yeah, last
The
Thursday.
new candle have opened here.
Mhm.
H4's there.
Mhm.
And that's not opening. What was the date last Friday? Was it the 11th?
That was the 11th. So on H1 there is a buy signal on
Oh, no.
CHJPY, right? Last Thursday.
I'm not. Yeah, the what I'm seeing here though is that the buy candle
Oh, no,
didn't
no.
close until Thursday. I mean, end of Thursday. So we would have only been looking for buys from Friday onwards.
It's fine if because I have actually had trade there, but forget. But yeah,
All right.
but I'm checking the usual signals that we are taking. It's not part of the trade. Yeah, it's only
Okay.
Thursday. It's only sell, but next week it's gonna be buy. Yeah, continue.
Okay, cool. So EuroCAD is the next one. This was a win on the sell. This was actually a really nice one as well. So it was simply that. Entered here. It was almost 2-1. And then as soon as price, again, you can see it slightly rejecting the 78.6 and then it dropped through.
Mm-hmm.
So that would have...
55 pips, I guess.
Yeah.
55 pips.
Okay, so Euro Swiss franc. This was a loss. And I took this one on the 9th of March and it was a buy. So it was this buy here. 1, 2. So what happened here is as soon as this buy signal occurred, I set my pending here. It's gone up. It hasn't triggered in. It's gone up. It's hit the 78.6, rejected it, and gone straight out the back door and taken my position with it.
Yeah.
But I'm not going to cry over that.
Yeah.
It was a loss. Yeah.
It's a part of trading anyway.
Yeah. Hang on one sec.
That's good that you are following. You are strictly following the strategy. It's very, very important for everyone. If you have your own strategy, it's very important to follow it, regardless if it's a win or especially if it's a loss. If you have to cut it, you have to cut it.
When in the last 2 weeks, out of 34 trades, I've only lost 3. So the statistics at the moment for me speak volumes.
Mm-hmm.
Euro yen was the next one. It was a buy on the 9th of March, and that was a break even. So on the 9th of March, this buy here. So 1, 2. Okay. So here you can see that as soon as this buy signal happened, set the pending here.
Mm-hmm.
It's come back down. It's entered into the trade. It's gone up to the 78.6, rejected it again. I've entered break even, and then it's come back down. Mm-hmm. Obviously, if I held on to this position, it would have still made profits. It would have still hit my take profit. So that's what I'm looking at in terms of data. How many times once I'm hitting break even, is it going to take profit versus a loss? So I'll measure it. I'll measure that over a period of time.
So you re-entered the trade after the break even?
No. And this is what I'm going to change actually, because I've identified something. But at the moment with this particular trade, as soon as I had the buy here, I set the pending and then I left it. The only time I have been closing the pending is if the market moves up to the swing high or swing low. Yeah. So if the price touches 100, then I would have closed the pending historically. So I'd have left it.
That's right. That's part of the strategy that we're using.
Yeah.
Okay. But you didn't. It's just that you didn't re-enter it, right? Because after the strategy that you are using, there is a re-entry point around Wednesday and Thursday. There are two buy signals actually. But it's fine if you didn't.
Yeah. No. I have actually got it on my next list here on the 10th of March. There was a re-entry. So 1, 2.
Okay.
Yeah, I've got that.
Sorry.
I've got that as well. Yeah. So again, it's hit the 78.6, entered in, then gone straight back up.
Mm-hmm.
So the price actually hitting the 78.6 here, this is where I would have set my break even.
That's good.
Cool, no problem. Next one, Euro USD. This was a loss.
Yes, your USD was a loss.
Yeah, so that was a sell signal. So that was this one here. So 1, 2. Yeah, so that's exactly what happened. I entered pretty much straight on the 50, and it just went straight out the back door. Again, there's not. I've done plenty of analysis on the Euro Swiss franc and the Euro USD. There's nothing that could have been done to stop these trades from becoming a loss.
Yeah, there's nothing.
The next one as well, GBP AUD. This was a loss as well, but there is something that I could have done to avoid it. So 9th of March, GBP AUD, that was a buy. So it would have been this one here. So 1, 2, swing high to swing low. Yeah, so you can see what happened here is on this buy. Let me just have a quick look at something. Yeah, so that's a buy. Yeah, so it was this one here.
What signal did you
So
took?
the price, this one here.
Ah, okay. Did you not take the signal at March 8th? March 8, yeah?
No, I never took this because this closed higher than the high of the previous 2 days.
Ah, okay. That's why you didn't count it.
No. So 1, 2. So I would have had a fib from here to here. But because this was already at the high, I didn't bother. I didn't take that, although it would have played out. No, it wouldn't have. No, hang on 1 minute. 1, 2. So unless you would have put the high up here, actually, at the time of the trade, it would have been there because that was the candle that closed.
Okay. Continue.
But the way that I would have read that, or the way that I do read it, is I would have gone like the previous high from the last 2 days. So that was already up at the 100. So I just completely ignored it. So this one here. Yeah. So the buy candle closed there. I would set my penned in here. It came in, entered me into the trade. It didn't quite hit the break even. So then I've left the trade and it's gone out the back door.
Yeah. That's gonna be a loss after that.
Yeah. Cool. Okay. Next up is a break even on the GBP Swiss franc. So this was a buy on the 10th of March. So 10th of March, this one here. 1, 2. So this was looking 1, 2. Yeah, so this swing low here. Yeah, so this trade here, it would have come up, entered here on the pending, gone back up to the fib 78.6, and then come back and been knocked out on Friday for break even.
Okay. So break even on GBP CHF too, right?
Yeah.
Okay.
GBP yen, that was a buy, a win on the 8th of March. That entry was taken. So it would have been this one here. 1, 2. I believe it would have looked like this. Yeah. So entry on the 50 and then went straight up to take profit. And it was about 85 pips, 84 pips.
Yeah. 84. Right.
GBP New Zealand dollar, 11th of March, that was a break even. Yeah, so that was this one here, this entry here. I remember this. So 1, 2. Yeah, so this came, entered on the 50, went up to break even, 78.6, rejected, then came back down to break even again.
Okay, so break even to on GBP NZD.
Yep. I shouldn't have got rid of that. Next, New Zealand dollar CAD on the 11th of March. That was a win. That was a sell. Yeah, so that was this trade here.
NZD CAD.
Yeah. 1,
Oh,
2.
yeah, I remember. I guess I gave
Yeah,
this
so
signal on the group, NZD CAD.
Yeah. Yeah, CAD was really good on Friday.
Yeah, it is. Most CADs are taken this week too, and last Thursday and Friday. Yeah, it's
55 pips.
yeah, CAD is a really good pair for us. I mean, currency for us this week. 55 pips, right?
Yeah.
Okay.
8th of, so there's only three more trades left. So New Zealand dollar, Swiss franc, break even. That was a buy on the 8th. Where is our entry signal? I don't know why my screen's jumping around. So this buy here. 1, 2. Yeah, so this one was break even. So this went sideways for ages.
Yeah.
Sitting on my hands watching this one. So it came up, hit 78.6, and then went out break even. Just went sideways. It was horrible. USD CAD, 10th of March.
Yeah, USD CAD.
So yeah, so this one here.
It's the last trade, right?
I've got the USD yen as well.
Oh, okay.
So 1, 2. So that came back up, hit the 50 fib, and went straight away down.
How many profits?
That one, 55 pips.
Okay, 55 pips.
And then the USD yen, this was just this was a very painstaking trade. 10th of March buy. I entered this earlier, but again, I'm going to make some changes, which would have meant that I would have entered this a little bit later. But I initially took this signal here. Go back 1, 2. So this candle here. This one here. So this just went sideways before moving back up again.
So you just hold your trade, right?
Just held it.
Yeah. Okay. So
yeah, and then
okay, continue.
Yeah, there was like a few trades that I had open on Friday, so I just closed them.
So it means every Friday before the market close, you close all your trades, right?
I haven't made up my mind about that yet. Because what I've seen over the last couple of weeks is it starts off quite slow. The markets start off quite slow. The positions start building, and then it gets around Wednesday, Thursday. That's when like I suppose you could kind of call like the big players coming in, just sweeping the markets, taking all the cash out of it, and we kind of ride in with those waves. So like what I found is by Friday, most of the first week, all my positions were closed naturally, and like the Friday just gone, I only had three positions open, so I just thought, they were both floating in profit. They're almost near their take profit, so I just decided to close them.
So either your just to be clear, so for everyone, I want to ask if either your trade is positive or negative, you will close it on Friday, or only the positive ones?
Um, I haven't made up my mind on it yet. I mean, I when I get to that situation, I will see where I'm at. If I've got lots of positions opened and they're sort of around break even, then I will probably leave them open over the weekend. Obviously, the thing that I'm being mindful of on over weekends is gaps,
Yeah.
and also the fact that if I had loads of trades open on one particular currency, like the Australian dollar, for example, a gap can appear on most of the AUD pairs over the weekend. So I'll be mindful about getting caught out like that.
Okay, so it's like it depends on the market situation and on your
Yeah,
trades. Yeah, that's a good decision too, because if especially if you
exactly.
have so many trades on one currency, it's very important to manage the trade. Because for example, if one currency reversed, most of your trades would be losses.
Exactly.
It's important too. Anyway, I'm counting your pips. It's 1,583 right now, right? Because this week, as I
Yeah,
remember, we have around 400 pips too.
yeah,
So like last week is 1,100. This week is around 400, so 1,500. So we have a different strategy, but I don't know. It's just very near. Of course, not the same amount of pips, but the profits that we made is just around the same. Yeah, because
yeah.
the losses you got are my losses too, and yeah.
Yeah, exactly. And I mean, the GBP AED could have been avoided, but the Euro USD, Euro Swiss franc were unavoidable.
Mm-hmm.
There's just nothing that I've looked at different kinds of ways of adding in sort of further analysis, but then at the end of the day, I don't want to overcomplicate this. So yeah, I'm going to move to a sheet, and I can just share some analysis I've done
Oh yeah,
on
sure.
all my
That's
trades.
great.
Yeah. So can everyone see this?
Yeah, yeah, yeah.
Okay, let me just see if I can zoom in a little bit more. Zoom. Yeah. Okay, cool. So over the last 2 weeks, these are all of the trades that I've taken. And I'm just doing some analysis really just to see if I can find any trends or commonalities. So the first thing, which is quite an obvious thing to check, is does the D1 currency strengths is there any correlation between currency strengths and wins and losses? And at the moment, I can't see no correlations whatsoever. So you can see here that I've added in what the D1 base currency, the D1 base currency strength was against the quote currency strength. So that would have been like the pound versus the yen at the time. And you'll see big positives, big negative, and huge differences between the two wins, and the same there. But then you'll see a negative and a negative, and a very small number in terms of difference, but that was still a win, and so forth. There's another one there, negative and a negative, and that was still a win. So if we have a look at the losses, that was a negative and a negative, and that was a loss. But that was a negative and a negative, and that was a win. In fact, if you look solely at the difference between the two values, that was 58 and that was a loss. This was 53 and a smaller value, but that was still a win. So at the moment, I personally can't see a correlation between the D1 currency strengths and whether that indicates whether we're more likely to have a win or a loss.
Maybe you can try H4. If you would ask me the theory of the MACD CSM, because D1 is a very long trend, and usually D1 would take a month. It's like a whole month of D1 is, as I always say, D1 is a whole month of trend, but H4 is just the weekly trend. And usually what we are usually using is the H4, is the trend for the week. H4. Though we enter the trade on H1, that's the daily trend actually, the H1, but H4 is more on the weekly, because D1 is a very long trend.
So maybe he can do that in the next week or two, just to check out if there's a correlation between the currency strength.
Yeah, because usually, for example, if something like that, 86 and negative 72, for example, your information, was that January or March? Oh, that's March 1,
Yes.
right? March 1. So, for example, it's
Yep.
86 and negative 72. It means GBP JPY is really trending. I guess JPY is really, really weak, it means. And GBP means it's very, very strong. That's why if the gap is 158, it's really, there's a big chance, or really the general trend for GBP JPY is buy. It means it's one of the strongest pair for the whole month, if you would pair it like that. Do you
Yeah,
get what
I
I
can
mean?
definitely.
I mean, do you
Yeah.
get? Yeah, okay.
Yeah, I was just going to say I can check the H4. It's not an issue. But at the end of the day, what I'm looking at here is 30 trades, most are wins, 3 losses, and a handful of break evens.
Mm-hmm. Still, it's a good.
So at the moment, I'm not overly precious about adding in, like looking at divergences, the ADX strength, EMA's market structure, support resistance, or anything else like that, because at the moment the data is actually pretty damn good with keeping the strategy as simple as
Yes.
possible.
Yes, that's true. I like your strategy actually.
So agreed, he
Um,
has done this, he has done the D1, and we can't find any correlation when you add up to see the absolute values. So maybe
yeah.
when he tries H1 or H4 in the upcoming trades that he's going to take, maybe we'll find something there that will tell us, okay, the absolute value, maybe when it's high, this is what we come up with. Maybe it's a win, or higher wins. So let it be a test that he's going to do next.
Yeah. But as I said before, Shane, that my idea, if you want to have that, I guess my idea, if you would ask me, since I know the mathematical, the math between the on MACD CSM, H4 is a lot better than D1, because D1
Okay.
it's on months. It would take many
Okay.
days to, if you would like to look for correlation. If you want to use H4, I guess at least you would have some better ideas on that compared to H1. I mean compared to
Um,
H4.
okay. I'll tell you what. If we've got time, let's have a quick look at these 3 losses
Okay.
and just have a look at the
Sure,
H4.
sure.
So Euro, Swiss franc, H4. Let's just open this up. What were these doing? Both were negative. So that could be, and the gap between them was very minimal as well. I mean, we're looking at 27, 57. So the gap between them two at the time was 30. No, sorry, saying that. Apologies, because we need to go back to.
Yeah.
We need to go back to
The time.
when we actually took the signal, which was back here. Actually, sorry. Yeah, so it was still negative. So it's about 15, 23. So the difference between the two would have been about 7 at the time. So that could be a bearing factor for us not actually taking that trade because of the way that these lines are.
Okay. Yeah. But those are not the values, huh? On the upper right. Oh no.
So these are the lines at the time of taking the trade. So both were negative, and there was a different gap between the two in terms of the difference between the two values of about 7.
Okay.
Which was quite small.
Yeah.
Looking at the Euro USD, again, you had this is a sell. I mean, unless you're looking at the huge slope on the USD in terms of the USD losing strength, I actually do believe that we won't find the correlation between the H4 just looking at this, because you've got a positive and a negative value. The USD is stronger than the euro on this chart. So the indication would be that the euro would continue losing value to the USD unless you then take into consideration this steep slope of the USD losing value.
Yeah.
But I can do the analysis, which is fine. I can do analysis on it. It's not an issue.
Yeah, because to me, I'm
But
not doing that much. But
no,
it's fine
and
to it's fine if you wanna do it. It would be good if for your strategy too.
yeah, I mean, I'll share what I did actually find, which was quite compelling, and
Mm-hmm.
that was like trying to work out the cycle of the sort of swing of the market. So what I actually noticed here was on this trade, this trade, this trade, and I'll show you two other currencies which I didn't even a signal come up, but I didn't even bother looking at them. This is no arrow before price hits the 78.6.
I like no arrow, no signal.
Yeah.
Mm-hmm.
Let me demonstrate. So if we go to this horrible Swiss franc yen, hang on, I don't know why my screen is not working. So this trade here. Okay, so obviously when we map out the Fibonacci, we're taking it from a swing low to a swing high. Always, it's always from a swing low. Swing low to a swing high. Now, from the swing high here, which is the zero value, the price hit the 78.6 before an arrow appeared.
Yeah.
So the arrow didn't appear here. So I've actually worked out, and again, this will need a lot more sort of testing going forward, that whenever the price goes from the 0 to 78.6 and then an arrow appears after it makes that move, the trade is less likely to work out.
Mm-hmm. Okay.
Can you see that?
Yeah. But that's a lot
From
of
the swing.
That's gonna be a lot of analysis, huh?
Not really, no, not really, because I'm just looking at when from this point here, from when price went from this point to this point, the 78.6, was there an arrow from that bit to that bit there? No, there wasn't.
Okay.
The arrow appeared here. I can give another example. So the GBP AUD, which was this one here. So we won't go back 1, 2. Okay. So from the swing low, price hit the 78.6 on this move here.
Mm-hmm.
Okay, but you've already got an arrow, but I didn't take this trade because it was already ruled out because this market went higher than this point here.
Mm-hmm. Yeah.
So the price, because I got this arrow, when I got this arrow here, because the price had already gone from the swing low up to 78.6 before, and I'm not actually taking an entry somewhere along here, then I skip the trade. And I'm not too sure if that makes sense to everyone. But if I give a clean example of the Australian dollar CAD, where we took 1, 2, this one here, the price went from up to the swing high here and then came back down. And then we got the arrow before it hit the 78.6 fib down here.
Yeah, for me, that's one of the best setups actually. If it's very near the 0 Fibonacci.
Yeah.
And I don't know, this kind of pattern. How should I explain? It's like very.
I know
obvious.
what you mean.
Yeah. This one is very obvious that it's going sell soon.
Yeah. But if the price had come down and hit the 78.6 and then come back up a bit, and then we got the sell over here, I wouldn't have taken it.
Mm.
And I've noticed that if you look at the Euro GBP as well, there was a sell signal here. So this was actually a valid setup in terms of the signals, but because it was going sideways, it looked absolutely horrible. And I think the fib went here. So we would have this was at the actual swing high. And the price has come down, it's hit the 78.6, but we haven't got the sell signal until over here. And then it's gone out the back door. If we had a sell signal here,
mm-hmm.
and then we took the trade, we would have obviously broken even here. And then the price would have come back up and maybe taken us out, but we wouldn't have incurred a loss. All I'm saying is if we take every single sell, then we will incur more losses. And I think the way of not taking a trade if it hits a 78.6 here before you get the arrow, then that rules out some of the losses and also some of the break evens as well. So if I go back to my sheet, so these were the three situations where that happened. So where the price had hit the 78.6 before getting the arrow, I wouldn't have taken that trade. I wouldn't have taken this trade, and I wouldn't have.
I get what you mean now. Yeah, like
Yeah.
an arrow first before it hits the 78.6 Fibonacci. If it
Exactly.
happened, you won't enter the trade because most likely it's just gonna be break even, right?
Yeah, or a loss.
Oh yeah,
The
or a
the
loss.
reason being is
Okay.
yeah, the reason being is because that 78.6 seems so powerful. I mean, you can see on this here, like how the price is really rejecting that 78.6 level.
Mm.
And if the price has already hit it once and you're not already in the trade, then chances are it could go straight out the back door.
Yeah, yeah.
So if you get into the trade before it hits once, chances are it's going to come back to the 50 and then move back down, and you'll at least get some sort of profits or get out of the break even. But if you're getting in, you're technically, in my opinion, getting into the trade late if you're taking the trade like after it's hit this, after the price has already hit the 78.6.
I guess I have a picture of what you're saying now. That's why can you go back to AUD CAD?
Yeah.
That's why AUD CAD is actually really a really good example.
Mm.
Because this kind of setups, I don't know how to explain it, but maybe because my eyes are trained. For example, when I saw AUD CAD, the moment I saw this kind of setup, when I saw it, I already know that most likely the trend is it's a positive trade. It's gonna be a win trade because it's a very clean setup for me. Like the highs and the lows are really clean. Then it's below 50 actually, really. That's why it's a very clean and nice trade, and most likely this is a win, a win situation. The AUD CAD.
So you are seeing it
And
as being clean because you've not seen those other arrows that are confusing.
this is the thing that I don't know how to explain, but because maybe it hits a very low, it hits the very, can you see the TP where he puts it? It is very low there, and in few days it went so high, and because it's I mean it's so sudden, the price went down so sudden, the price went up again so fast, and suddenly we know that the general trend is sell. And since this thing has happened, most likely it's gonna bounce back again to the lowest price without even hitting first. And maybe what Shane is saying is, for example, the 78.6. It's not it didn't bounce yet that much. It's the start of the trend. Because for example, what Shane said, like the 78.6, it's like the price bounced already. And for example, on this or on forex, there are the patterns of trades. Most likely there are only limited number of bounces or retracement that would happen on before a trade would go. But for example, this one, there is no clear retracement yet, or there is no clear sign that another resistance had appeared. So it's gonna be the first time after during Friday or closing at Thursday. It's gonna be the first time that the price would hit around 78.6 or the TP. That's why I said it's very clean trade. I hope I explained it properly, but that's how I see it. These kinds of trade, especially if it's the first bounce on the resistance, or it's gonna be the first hit on the 78.6 or the 100 Fibonacci.
Okay.
I guess it has the same concept, but 78.6 just have a value, which is more precise. But because to me, it's just more of the eyes, more of how I see the market.
Yeah, it's clean because you've got a swing low, swing high entry here, and then the price is moving down.
Yeah.
But some of the setups, some of the setups look really scrappy.
Yeah, that's true.
I mean, going
Something
back
like
to
that. That's a lot simpler.
look at the GBP AUD, and you're trying to interpret data out of this complete mess. There's no sort of clean swing low. Well, this
Mhm.
is the actual swing low, and this is the swing high. So trying to get in over here is way too late because the market's already made its move up.
Mm-hmm. Yeah, yeah. Because AUD CAD, for example, is the first swing, but here there's a lot of swings, and that's why I'm
Yeah,
saying
actually,
AUD CAD is very clear. It's a very good trade.
yeah.
It's like it's
I
a
have
very yeah, yeah. It's like the first swing for after the those big swings.
I have a couple of questions for Shane. The first one is on your money management. You know there are some trades that you take and they last for like 2 3 days. How many
hmm
lots do you take? That's your lot size.
Oh, so I'm currently doing 0.5% per position.
How many?
0.5%.
Okay.
So if
So
I over the last couple of the last couple of weeks, I've had up to 10 positions running. So at 0.5%, 10 positions running, that would expose the account up to 5%. But I think you'd be very, very, very unfortunate if you lost 10
Mm,
consecutive trades all in one go across the different currency types.
mm, okay. Another question I have is this Fibonacci that you're drawing. How do you customize it to that you're able to have the TP max entry and all those things that you have by the side? How do you do that?
So I've double clicked on the red line here,
Uh-huh.
then right click, Fibo properties,
Uh-huh.
and then you go open this box here. I don't know if
Oh,
I
I
can make it
see.
bigger.
I
Yeah.
see.
So you can control and add in or delete certain levels. So the
Mm,
levels that I have for reference are 0 stop loss. I don't know if you guys want to write this down.
okay.
yeah, it's recorded.
zero
Don't
point
worry.
0.5. Right. Okay. And so forth.
And your separator, they're kind of clean. You have it daily. Is it where do you do that as well?
So right click, properties,
Uh-huh.
common, and then you select period separators here.
Yeah, I did that, but
You'd
mine is
also,
not as clean as that.
yeah, I think you need to change your foreground color if it's not to, you need to have this as set as white.
Okay, I'll try that.
I guess does other users still have questions, or you still have something to share, Shane, about your
No,
trades?
that's everything for me. I mean, I'll do some analysis on the H4, and I'll continue looking at break evens as well, just see if over the long term break evens are even worth doing.
Mm-hmm. Yeah. Anyway, I guess if there is no more questions, I really appreciate your time, Shane, for sharing your trades. Especially, congratulations for being positive now, for making more than
Thank you.
1,500 pips. I like your strategy too, and I like the way you follow your strategy. That how no matter if it's a positive or negative, you'll follow it. Your money management is good too, actually. Uh, just having a 0.5% exposure every trade is quite good. But to me, because
hmm
I'm basing my trades on if some users would ask, I'm basing my money management like every $1,000, just 0.01 lot size. That's how I
Yeah.
do it. So maybe it's around 1% to 1.5% risk per trade for me. Anyway, it
hmm
depends on your account, how big you can and how many pips can you hold. But just don't make it just for everyone who's especially the beginners, don't rush things to be too much exposed on foreign exchange, because if we didn't manage our margin levels, we will get burned market on the market. Uh, okay. If there is no more questions for anyone, again, Shane, I appreciate your sharing. I hope some other users soon would share their knowledge to and experience on our Mac DCSM. And I hope you would have another great week this coming week. Thank you, everyone.
Thank you.
Cool. No problem.
Thank you, Michael. Thanks again, Shane.
All right. No worries. Take care, guys. Thank you.
Thank you.
Thanks, Jane.